crypto market is still correcting, and it really looks scary to look at the market right now. When you look at the price and price action, you are like, okay, the supports are breaking. The current supports are breaking. So on a monthly, you have room to the downside. The first major support would be 34,800, somewhere close to the current price, right? And then the next one is on a weekly, which comes here close to $32,000. So you have room to the downside on the indicators, suggesting you may actually have a downside towards 32,000. Now, this particular chart shows how the patience of the most patient investors were killed or getting killed right now. Right? We've been consolidating in this pattern from 371 days. And if we look at this pattern, usually it follows the impulse direction. So the impulse is to the downside here. You do this stuff and then you continue to the downside, right? That's the pattern. Now, when you look at the entire market, which is being in red, going that direction, and come back to Ether, this seems bullish. Anyone who observes TA will have a similar perspective. The move is to the upside, your impulse is to the upside, your consolidation is here, and most likely you're going to go to the upside. The MACD is crossing to the upside, 1. RSI is creating a falling wedge, that's 2nd, and that falling wedge is about to break to the upside, that's 3rd. So when Bitcoin is going to the downside, this is an opportunity zone being shown on Ether. Now that's an altcoin, showing the altcoin market may move in this direction. If you have this, usually you take a step back, which is this correction, and then move higher. So while we look at XRP, we get something like this. Okay, we are inside this pattern for a long period of time. We've been moving inside this pattern and we are still inside that pattern. Things did not change yet. We are still inside that pattern. So when you come to XRP USD, we are inside another pattern, which is a symmetrical triangle where you are right now at the support. So if you are breaking this one, your next low expectation should be somewhere close to 0.51, right? That's your macro trend. So on a 3-day chart, when you look at XRP, this is what you observe. Okay, we are close to the support range. But on a weekly, this shows, okay, your 200-day moving average is somewhere close to 0.49. So even if there is a drop, 0.5 to 0.5, that range can be anticipated. Because even on this one, you do have a little bit of room to the downside on the indicators to reach their support. But now you zoom in. Fine, when you zoom in to XRP, you get this pattern. We broke to the downside. This is a measured move. We still have room to reach there. So even on a short term, you actually get that. But right now, the price is actually holding this low, which we had put in Feb, right? So the Jan-Feb low is holding as of now, but if we are not able to break higher, we are going to the downside. Now, charts show you different stuff, right? When you go on to this kind of chart, it's red, blue, red, blue. It's kind of total noise, right? But when you put that into this one to actually reduce the noise, okay, now you have the same, it's kind of a monochrome kind of stuff where you look at black and green gested. And then to clarify a bit of the trend, you can go to Heikin-Ashi. A Heikin-Ashi chart usually reduces that noise and gives you a bit more clarity about the momentum in the market. So right now, you're still in downside momentum. You're having that, but your support is still holding. But if you put this, it's an ascending triangle. So, the market can do crazy stuff like these wicks. So if it actually wicks to the 200-day moving average, we can't say you can take up a leverage trade at the support. Usually it's buy the support and move it till the resistance. But at this point, if you are putting trades, make sure you are not leveraged. Because if short term, say in 2 days, 5 days, or a week, the market trends down and then go back up, you hit your stop loss and you are moved out from the market. Then the market trends higher. Because if we break this one on a 3-day, that's scary. So you don't really want to put leverage trades there. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. Now, if we look at this, So this is support of XRP. Two bottoms we got here, a double bottom, and then we went up, fine. Then the next low was here, close to 0.56, which is a higher low. Now, right now, we are breaking through our previous support zone, which happened to be 0.58. But if the buyers happen to come back and hold the price there, that is bullish. Now, why do I say that? Look at the MACD. It has a possibility that it can go to the upside, can break to the upside. Now, if you're zooming in to look at the price action, this is a daily chart and you have the 200-day moving average plotted. Now, one of my reasoning there is, say, when we look at the worst days here in this last consolidative period, you can have a look at this. Okay, we are observing that the price is already 30% below the 200-day moving average. Fine, one. Now, you look at this one, the last time we did this was 39. So say 31, 39, 30, you take the average, 33, 34% is your downside. Now, if you extend this, you may reach that 37, 39 range here at 0.52. So moving towards 0.52 before we move higher cannot be ruled out. But market is crazy. We don't know what the market is actually going to do. But looking at the odds, this suggests like a huge possibility. Now, you go look at what happened last time. We actually did 39-40% drop, right? But the wick was that low. The price action was kind of here, and the close on a daily, you got somewhere around 30%. Now, going to look back at the previous crash of March 2020, which is the Corona crash, you can have see 40-45% drop. Fine, that was at the end of a bear market where we were capitulating, going down from a very long time. See, the top of that cycle was December 2017 and this is 2020. So you kind of consolidated entire 2018, corrected down 2018, 2019, 2020, 3 years to the downside. But right now, if you're looking at the market, anyone looking at the market will be observing something like this. Now, yes, if you follow closely, you are like a 1 way here, but that's the standard deviation of the closes, daily closes. If you follow that, we already broke to the downside. Fine. Now, keeping in that, if we are actually moving in that particular direction, okay, we are observing from 2020, we've been trending higher, we are holding those levels, fine. But right now, the moving average is above the price of the price is below the moving average. Now, same, if you look at this to the downside, 60% to the downside, fine, to reach the moving average. But if you look at the opposite, it was like 200% to the upside. You then go back to the downside. Say here, around same 188% to the upside, and then here 50. So you are increasing and going to the upside when you go to the upside. Now the downside seems to be slowly reducing as you move to the upside. There's 40% here. Then your absolute bottom here is 31%. So if that plays out, the price need to hold at least 30%. If that trend need to be valid, you need to bounce from here. And when you bounce from here, usually any trader who look at the market, he can, if he is using a long time frame like this with a 200-day moving average, he would be looking at, okay, what was the historical correction below the moving average? And you take that from the moving average and you get like, okay, 30-40%. We get that kind of thing. So somewhere around 30% is my buy area. Now, in that buy area, if you're looking at the supports, we are at that support range trending to the downside. Now, when we do this triangle pattern, this is a descending triangle, right? You go on Google and just type in like, descending triangle patterns, and what you observe is something like this. If you are trending to the downside, the descending triangle shows you that you are going to continue to the downside. So now you go back to the price and see, were we trending to the downside? No, we were trending to the upside, right? Our movement was from here to the upside. So we were trending to the upside. Now, next stuff is like, okay, you'll have to then find a descending triangle in history which shows the price action. So, okay, here you got one. You're going up, you do all these stuff and then break to the upside. Negative scenario is this is a reversal, but most likely it's going to continue that pattern. Fine, there is a drawn scenario. It's not something which happened in the price action history of other assets. So you can slowly scroll down to see what happens in different assets. One is negative, it's showing you went up, we made this pattern, we broke to the downside and then came lower. Now here on this one, your low is here, the next low is here. So if you actually follow the price and draw this line correctly, that would actually give you some difference, showing okay, the pattern is not exactly the descending triangle, but the impulse direction is to the other side, one, and then you actually get the symmetrical triangle, which the XRP almost every time does symmetrical triangles. If you look back in history of XRP, you actually get this pattern every now and then, right? We do this pattern every now and then. So it's not actually surprising that XRP is still doing the same pattern, weathering all the holders out. As I told, even the most patient guys, their patience is being killed right now with this consolidative correction. Because we are not going lower, we are not trending lower, we are not going higher in this time frame, we are inside that pattern, right? So if you go on a monthly chart to look at what happened before and just to see like what the price did, this is where we are, right? This is where we are. We had a start from here after that crash. We went all the way up to $2. We closed somewhere here. And then the last candle, this is your last bullish candle. We are still inside that price action. So if you consider that as a mother candle, if you will, this is where we are right now. So your close on a monthly is here, some way close to the current price. So if you break that one, yes, you can go lower, which would be towards this range. That would be 0.49. Now again, based on a lot of different indicators, you have that as another huge support if you are breaking to the downside from here. So Bitcoin maintaining the current low is important on a monthly, because that 35,000 has been a support on a monthly. If it breaks, that's going to the downside. But on the other side of this, you have a lot of stuff happening. This is not that old. When you read through this one, you're going to get big idea. They're talking about crypto space. They're talking about the payment space with the new digital platforms coming in, the private banks, non-banking partners, everything is actually coming in. Especially payments with lower cost, lower friction and financial inclusion is being highlighted again and again. Then you go down and they're like, okay, the Federal Reserve is engaging with research and experimentation of these new technologies with close cooperation with the private sector. So we already know Ripple is in the faster payments council. They are giving their ideology. And when you come to these, the scalability issue is actually big stuff. You can't actually build on Ether with that scalability issues. 1, 2, you need huge amount of money to be transferred. Say, look at the total amount of gold. Some people argue that gold is going to be used. So gold is right now $12.5 trillion. And then you go look at all the money in the world and you'll be like, okay, that's a quadrillion dollars. That's hard. If you want to look at the circulating supply of money, it's like $40 trillion. So if you look at everything like the broad money, the money kept in bank and all, you are like, okay, it's coming close to $90 trillion and the gold is 12.5. So literally gold will have to go 5-6x to the upside to match this money supply. Or the money supply has to drop like this to reach this area to gold. Even if gold doubles, that's $25 trillion and the entire money supply, 90, it has to drop way lower. So that's like, most or half of the world going homeless, laid off, having nothing. That doesn't actually look like a possibility. Now, 10, 20, 30%, yeah, that's going to happen. The money supply is going to reduce. We may come to $70 trillion from there. But I really don't think we are going to come towards this range. Because if you go into this, most of the money, it's not just that. You go look at silver, cryptocurrencies, big companies, investors, big states, blah, 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 and you go through all this global money supply, assets, real estates. These are big, big numbers. And a lot of money is in the derivative market. That's $544 trillion. That's not a small amount. That's a huge market compared to anything. So whenever the money is coming into the market, printing, it actually goes into these kind of market, financial structure. So right now, it's not bearish. When you look at the market and just the price, it may feel like a bear market, but when you actually look what's happening, this is Telcoin news, right? It's actually showing you, okay, we are here in the space, we are offering you to send money. Now, there are Ripple partners who actually use just $2.5 to transfer $1,000. So even this one seems expensive in that case, $200, and you're going to send 2.4 as fee. Whereas if you use Senbi, if you use Cross, you're going to just pay $2, kind of $2, 2,500 won as a fee for $1,000. Now that is cheaper than this. So utility is going to come in, because on the other side of this, your inflation is going higher. If you look back 2 years, 1 year, 1.5 year, 2 year, you're going to see a lot of videos where we actually discuss about this coming in. The inflation going high at a point where there is a big number on the other side in the financial market, and then you look at the price of your crypto asset and you're like, okay, it's lower. But now the potential market cap or the valuation which you can reach is much higher. Look at that, from $3, close to $3, you're right now $7.5 here. That is actually huge. So if you happen to move higher in the tier, you actually understand one thing. The tier means the financial tier. You learn and you educate yourself and you are like, okay, fine, this is going to end good for those who are prepared. But for the majority who are not, it's going to be so bad. So if you are in this market, understand this, the market is volatile. You'll move up, you will move down. There's going to be a lot of fluctuations inside this. But we try to stay updated. We try to be in the market alive, because there would be some assets which would still hold. There would be some assets which are kind of neutral. There would be structures shown, price action structures shown, which shows a possibility that, okay, we may actually have a little bit of slowdown in Bitcoin and then a small bounce where all coins move higher. That cannot be neglected. That is a possibility. So if you are prepared for all those, you may have an edge over the majority of the people who are right now in the market. So guys, if you're receiving value for your time, please do hit that like and subscribe button if you haven't done that already. And if you would like to get these charts, you can look at the Patreon. The link is given in the description below. So I'll meet you on the next video. Bye for now.